In this morning's Money Watch, reverse mortgages. They allow homeowners to pull cash out of their homes without making payments. Now, a Consumer Reports investigation shows, especially from the last couple of years, the number of such mortgages that have failed and have been taken over by the government has quadrupled. CBS News business and economics correspondent Rebecca Jarvis is here with pros and cons. Now, assume you haven't done this in the past. Your home is pretty much paid for or paid for. These things can be a pretty good deal. How do they work?
They might make some sense for you in that case, Harry. What you look at with these loans is that they're loans that let you take cash out of your home. We're expecting to see this year about 107,000 of this type of loan get done, and we're talking about a $30 billion market right now, so it is a very big market.
Right. Who qualifies for a loan like this?
There are age restrictions on these. You have to be 62 years old or older. On top of that, you have to own the home, so paid off most of it at least. And on top of that, you have to live in the home.
All right, so you live in the home, and then what's the big qualifier here?
Well, the big qualifier here is that you're going to be taking out money from your home, but you're also potentially going to be paying some higher costs associated with these. There are other types of loans, ways of getting money that can be less expensive. In this case, we're talking $15,000 to $20,000. However, Harry, in recent weeks, a number of banks have actually cut out some of the big costs. So those origination fees that run about $6,000, Bank of America and Wells Fargo, a number of other banks, have cut those out of the transaction.
Which makes it attractive to a degree. So this is like closing cost, except all the way on the other end of it.
Exactly. So you're paying the costs on the other end. They end up accumulating interest over the sentence, the timing of the loan. So that's where things can get more expensive down the road because you're paying the interest.
What any other kind of drawbacks?
There are drawbacks to consider. First off, if you don't think you're living in your home for a long time, those costs up front end up outweighing the overall thing that you're going to take in from the loan. Also, if you want to pass your home along to your heirs, if you want to pass it along to your children.
You don't want to take all of the equity out of it, right? And leave them with a mortgage to pay.
Exactly. So they'll be the ones taking care of it, or you'll be reselling it, and that's how the loan ends up getting paid.
What's the most important advice you can give to people before they're going to make a commitment to this?
The most important advice, obviously, in all of these cases is to know how it works for you. You have to beware. There are some misleading marketers out there taking advantage of this market. It's very ripe. Know your alternatives and speak with that family, because the family is the one that inevitably is going to have to think about this in the future.
Right. Rebecca, thank you so much.
A lot happens early on The Early Show, weekday mornings on CBS.